afternoon and welcome to this year's Accounting Telematics broadcast. It feels like we've been at school a month, and grade 12 it looks like we've done almost 3 months' work. But welcome. The topic for today is going to be companies, and we'll be covering activity number 1 that will be in your telematics workbook. The very important section is companies, and that consists of what makes up almost or close to 50% of your matric paper at the end of this year. So you need to pay careful attention to this section of the work with your teachers, and obviously when we are revising whatever they were doing at school. So for today, we'll be doing activity number 1 in the Telematics 2018, and it's going to be company ledger accounts together with the notes to the financial statements. Okay. So when we have your notebook, you also have an answer sheet, which looks something to this. So this is where we'll be doing the concepts, which forms the background of the companies that we're going to do. Okay. So first of all, it just will have to be the concepts, and then we'll go into the general ledger, and then we'll do the notes. Okay. So in your notebook, you've got activity number 1, which is 1.1, where they give you a word bank, and then they give you some statements, and then you have to choose the correct one, and you only have to write the correct answer next to the numbers as it is in your answer book. Okay. So the word bank starts with operating profit. That is something that you'll see in your income statement. You have prepaid expenses that will also to be with adjustments. There's working capital, something that you were exposed to last year. Then for this year, it's issued share capital. That will be the capital account, or you call it now the ordinary share capital. Then you have financial asset. A financial asset is just an example of a fixed deposit. So non-current assets, so it will together with your fixed assets and your financial assets. An example of a financial asset is a fixed deposit. Then there's director's report, something that you'll be dealing with in companies. Cash and cash equivalents, you were exposed to that last year. It forms part of the balance sheet. Accrued expenses, authorized share capital, and audit report. Okay, so we're going to look at these questions, and then we'll have to choose one from the word bank, and then we'll have to do it on the answer sheet. Okay, so 1.1.1, it says the total difference between current assets and current liabilities. Okay, so if I look at the options available for me, it says current assets minus current liabilities, because they're talking about the difference. So current assets minus current liabilities is called what we know as working capital. We can also call it net current assets. Okay, but this one was not in the word bank. Okay, so only working capital is in the word bank, so that is the one that we are choosing over there, which is working capital. I think the second question, it says the published explanation of a company's activities and future plans. Okay, grade 12, what you should remember is that the owners of a company are shareholders, and the shareholders appoint a manager or a few managers to manage the company on their behalf. Now those managers are called directors, and the directors are accountable to the shareholders. So they need to report to the shareholders what their future plans is and in what direction are they taking the company. So when it says the published explanation, which means they have to publish this in the financial statements about the company's activities and future plans, that will then be called the director's reports. We just need to remember that the directors are accountable towards the shareholders. So they have to report to the shareholders. If they don't report to the shareholders, or the auditors tell the shareholders that the directors have not been performing their duties, they will not be appointed again as a director the following year. Okay, so the directors report, they are very important people to manage the company on the shareholders' behalf. Okay, then by 1.1.3, it says a fixed deposit. Now, a fixed deposit is an example of a financial asset which will not mature, okay, which means it will remain fixed. Therefore, that will still be a financial asset. So 1.1.3 will just be financial asset. Okay. Very important, it says a fixed deposit which will not mature in the next financial year. Okay, so that will still remain fixed, so it will still be a financial asset. If it was going to mature, then it's no longer fixed, then it will form part of cash and cash equivalents. Okay? So very important, it says a fixed deposit which will not mature. So therefore it will remain fixed, so that will be an example of a financial asset. Then by 1.1.4, it says the telephone account that will only be paid in the next financial year, which means it wasn't paid in this financial year, we still owe the money, and because we owe and telephone is an expense, it's going to be classified as an accrued expense. To be classified as an accrued expense. Okay. Then number 5, it says it reflects the opinion of the reliability of the financial statements. Okay, I'm going to read it again. It reflects the opinion of the reliability of the financial statements. Okay, so you have a choice over here. It's not the director's report. It can only be the auditor's report over there. Okay. Also again, let me just get the answer in first, and then I'll explain what the auditors do. It's an audit report. Okay. The auditor, or also called the external auditor or independent auditor, they are also appointed by the shareholders. Like the directors are appointed by the shareholders, the auditors are also appointed by the shareholders. The directors manage the company on behalf of the shareholders. The auditors are appointed by the shareholders to ensure that the directors are doing their job properly and they are not committing fraud. So also the auditors, they also have to report to the shareholders. So if there's anything fraudulent happening in the business, then the auditors will mention this in the report, and then the directors will have to be held accountable for that. Okay? So the auditors are obviously very important people, and they are independent, they are unbiased, okay? And their opinion counts a lot. Okay, that's with auditors. And then the last one, it says the total number of shares that the company is registered in the memorandum of incorporation. Remember, it says the total number of shares that is registered, not the number that is issued, the number that is registered. So for that, it will be the authorized share capital. Okay. There's a difference between the authorized share capital and the issued. Remember, authorized, the maximum number of shares the company is allowed to issue. Issued is the actual number that they have issued. Okay, that takes care of 1.1.1. Okay, let's move along and see what the rest of the question is asking us. Okay, the next part of the question involves ledger accounts, also a few notes to the balance sheet. Okay. Here you can see the ledger accounts. These are the ones that we have to open. They will also appear in your answer book. Special attention needs to be paid to the first two, for example, which is ordinary share capital and retained income, because later on it is linked to a few notes that we have to prepare when we do the balance sheet, which is also called ordinary share capital and retained income. So whatever the balances we're going to find in the ordinary share capital and in the retained income should be reflected in the ordinary share capital and retained income note. So there will be a link between the general ledger account and the note for the financial statements. Okay. What's also important in the information, where we need to read matrix, is this part over here. It says that they are authorized maximum number of shares the company is allowed to issue. They are authorized to issue 1 million, and they have already issued 600,000 up till the 1st of March 2016, which is the beginning of the financial year. Okay. Then they want us to complete the ordinary share capital note, the retained income, SARS account, ordinary share dividends, and the new account for you is appropriation. All these accounts will have to be closed off and properly balanced at the end of the financial year, and then we have to do the notes. Very important on this page, it's the amount that's authorized and the amounts that's issued. Okay. So that is just your instructions. So now let's get to the information so that we can see how to start. Okay, so here we have the information. By information A, they're giving me the opening balance for ordinary share capital. They've got the 2016 column and they have the 2017 column. Okay. Now, whenever we're doing a ledger, grade 12s, we cannot start the opening balance of a ledger on the 28th of February. Okay. If there's a column, like in this case, there's a column for the 28th of February 2016, which means the financial year is going to start on the 1st of March 2016. So all these balances should be on the 1st of March 2016. It was last year's closing balance. Last year, the end of the financial year was the 28th of February. That was last year's closing balance. So last year's closing balance will automatically become this year's opening balance because of the going concern principle. Okay? So last year's closing balance becomes this year's opening balance. Please, we don't have opening balances at the end of a financial year. Okay? We have the opening balances in a general ledger at the beginning of the financial year. Okay? So they're giving me the opening balance for capital, the opening balance for retained income, and the opening balance for SARS. Okay? So what I did quickly, I just filled in the opening balance for capital, which is 2,100,000, and it says there they were authorized to issue 100 million. But that consists of 600,000 shares. Okay, that's 600,000 shares that were in issue already before we started. And then we have the opening balance of the retained income. Okay, so if you look at the information, anything to do regarding shares will then have to go in the ordinary share capital account. And there might be a repurchase, and then we'll need the amount that will have to go to the retained income account. Okay, so these two accounts will be interlinked, and all the information will be over here by the letter C. Okay, but let's just go through the information to see what they're busy doing quickly. They're also giving us an opening balance for the SARS account, and they're giving me a closing balance for SARS. And please take note, it says that SARS has an opening credit, but the closing balance is on the debit side. Okay, so SARS are one of those accounts where the opening or the closing can be on the debit or the credit. Okay, so they need to be very careful to check on which side is the opening and the closing balance. So when we do the SARS account, we'll come back to that particular item over there. Okay, then they're talking about the income tax. Right? So that income tax, that will obviously affect the SARS account. And we're going to need the income tax that's going to go to appropriation. Okay, but here we have the shares. So this part will affect the ordinary share capital. It will affect the retained income. And it will affect the dividends. Okay, so this part is very important for us to do, right? So C and D eventually will be part of it. Okay, then right at the bottom, it says the company made a net profit before tax of 1,475,000 for the financial year. In other words, that is the figure that we went to and calculate in the profit and loss account. Okay. So let's see what happens. So the first account that they want is they want us to complete the ordinary share capital account. Now remember, we started with 600,000 ordinary shares and they were authorized to issue 1 million. Now it says on the 31st of August, all the unissued, in other words, the 1 million minus the 600,000 equals 400,000. All the unissued shares, so we're issuing the unissued shares, which is the 400,000 shares, and we're asking 500 cents, which equates to 5 Rand per share. Okay, so here we have to multiply. We have to say 400,000 times 5 Rand, and that will give you 2 million. So when we do the entry, grade 12, okay, it's going to go in the ordinary share capital account. Remember, authorized was 1 million. We already issued 600,000. So now we're going to issue the extra 400,000 that we have left. And it's going to be issued at 5 Rand. So it's going to be 5 Rand multiplied by 400,000. So it'll give you 2 million. So when we're issuing the extra shares, it means that our ordinary share capital will increase by 2 million. So that will increase by 2 million. Okay. We're receiving the money, so it's going to be entered in my cash receipts. So my contra will be bank. It says that we have issued these shares on the 31st of August. Okay. So if I look at that account at the moment, I can see that my total capital is 4,100,000. And now I have issued all the shares that I was authorized to issue. Okay. So it says there again, just to recap quickly, on the 31st of August, all the unissued, in other words, the 400,000 shares were issued at 5 Rand. Okay. Then, a very important part, where they're talking about the buyback or the repurchase. Okay. It says on the 30th of November, the directors repurchased 120,000 shares at 6 Rand 20 per share from a retired shareholders. This shares originally purchased his shares on the JSE at various prices and at different over the past years. All you have to remember is that you're going to buy back 120,000 shares at 6 Rand 20. So what's happening here, grade 12, is the repurchase is 6 Rand 20. Okay. So whenever you buy back, you have to establish what is the average share price. Now, in order to get the average, we take the ordinary share capital figure at the moment, which is 4,100,000, divided by the number of shares that 4,100,000 represents, which is the 600,000 plus the 400,000, so that gives you 1 million. Okay, so it's again the capital divided by the number of shares issued. So it's those two figures over there, which is 4,100,000, divided by the number of shares that make up those two amounts, which was 600,000 at the beginning, plus the extra 400,000. And as you can see, the average comes to 4.10. Okay, but we're buying the shares back at 6.20. But the average is 4.10. Okay, so that 6.20 has to be split between the average and the amount more than the average, which in this case is 2.10. Now together these two amounts must make up the 6.20. Okay, so the average, that goes to the capital. Okay, that goes to your ordinary share capital, and the amount more than the average, that goes to your retained income. So that figure will eventually end up in the capital, and the retained income figure will eventually end up in the retained income note over here. Okay, so there you have the capital, and there you have the retained income. So the 6.20 has to be split between the average and the amount more than the average. Just to recap, the average, you take the ordinary share capital divided by the number of shares issued. So there we have the ordinary share capital, which gives me the 4,100,000, divided by the 1 million, which is the 600,000 plus the 400,000. So the average comes to 4.10. Now when you're buying back, it means that your capital is going to decrease. And your capital is going to decrease by the number of shares that you're buying back, which in this case is 120,000 times 4.10. So your capital is going to decrease by that amount. Okay, so if we multiply that, just want to clear, so 120,000 multiply by 4.1, and your capital is going to decrease by 492,000. So your capital is going to decrease by 492,000. Okay, and it's again bank, because we're spending, the company is spending money to buy back those shares. Okay, so the shares, your capital will decrease with 492,000, and this is happening in November the 30th. Okay, so again, the average goes to the ordinary share capital account. The amount more than the average, that will come to the retained income. So we're going to have bank also on the debit side of the retained income account, but this time 120,000 times 2.10. That gives you 252,000. Okay, so we're buying back, calculate the average, 4.10. We split the repurchase price between the average and the amount more than the average. The average goes to the capital. The amount more than the average goes to the retained income. Obviously, both these figures will have to be multiplied by with 120,000. So it's 120,000 times 2.10 will go to your retained income, and 120,000 times 4.10 will go to your ordinary share capital. As it stands, the capital account is done. We just have to balance that account. So if we total this, it's 4.1 million. 4.1 million. So remember that we are balancing at the end of the financial year. Right, so that will just be 4.1 minus that balance will be 3 million 848,000. Okay, so the capital account is complete. We have the balance. Later on, that balance will be reflected in the ordinary share capital note for the balance sheet. Okay, we are still not done with the retained income. We have the opening balance, and we have the portion of the amount more than the average that has to go to the retained income. Right, so the capital is done. We're busy with retained income. We'll come back to this as we move along. We just see what they have next there for us. I think they're talking about a SARS account, and they're talking about the income tax, the SARS, and the appropriation. So we just have to get to those answer sheets quickly. Okay, there we go. They're talking about a SARS account. They're talking about ordinary share dividend account. And then eventually they're talking about a appropriation account, which we have over here. Right, so it's appropriation, the SARS, and the ordinary share dividends. Okay. So just remember that the SARS account has an opening balance and the SARS account has a closing balance. So if we look at SARS quickly, the opening balance is 8,500 on the credit side on the 1st of March. So let's just fill in that quickly. On the 1st of March, opening balance is 8,500. Then what they also give you is the closing balance, but it says the closing balance has a debit. Now, very important, grade 12. Debit means below the total. It means below the total. So if that line is for the totals, then the debit balance will be 5,000 over here. That's what that means. So that will be on the 1st of March. This is 17, and that's obviously 16. This will be the balance. This will be the new balance. But if this is the balance brought down, then surely the balance brought down had to come from the opposite side. 5,000, which was balance carried down. And this was on Feb 28. Okay, so they're giving me the opening balance on the credit side, and the new balance for next year, they're giving me the closing balance, which is 5,000 on the debit side. So the only item that I need to write on the credit side will be income tax. That's also on Feb 28. Okay, so let's see what the information says about the SARS and the income tax account. Okay, it says, on the 5th of March 2016, the amount due to SARS was paid by check. So in other words, we are paying the amount that we owe, which is 8,500. In other words, we owe SARS 8,500. Now we're paying them 8,500. It says on the 5th of March, and it's going to be bank. Okay. Then, provisional income tax was paid to SARS for the year in 2 equal installments on the 1st of September and the 24th of February 2017, respectively. Okay, so they don't give an amount, but they're saying it's 2 equal installments. So what you have to do, you have to pay SARS, that's once, the first provisional payment, and then we're paying them again the second provisional payment. And these 2 figures are the same. The first one is paid on the 1st of September, and the second one is paid on the 24th of February. Okay, they don't give those amounts. Nothing else is given, except right at the bottom by the information. It says income tax for the financial year amounted to 30% of the net profit before tax. And if we look at the information E, it says the company made a net profit of 1,475,000. So my income tax figure, this figure, is 30% of 1,475,000. That is what that figure is. So if I take my 30%, let me just clear this, 1,475,000 times 30%. My income tax is 442,500. Okay. Let's just see quickly. I think we have a question. Okay, it says the balance carry down. So let's just look at this again. They're giving me the opening balance for SARS, and they're giving me the closing balance for SARS. But this closing balance will be the BD, which is the same. That one is also the BD balance, which is the brought down. Now the brought down normally comes from the carry down. So if we have a debit brought down, which is below the totals, then the carry down had to be above the totals, but on the opposite side. So we're working like this. Okay, so now they're giving me the debit balance, which means they had to come from the credit side as a carry down balance. Then I calculate the missing figure for the income tax. Now I have the missing figure that make up these totals, and those two items are split evenly because it says it's two equal payments. So if I take my 442,500 and I plus 5,000, plus 8,500, I get a total of 456,000. 456,000. Then obviously I have to take away 8,500. Then I get that total is 447,500. But it says two equal payments. So I just divide that by 2. So I get 223,750. 223,750. That is what those two totals are made up of. Okay, so let's just go again quickly. They gave me the opening balance and they gave me the closing balance. So I'll work backwards. If it's on the debit side, then obviously it's from the credit side, CD. Then it says that SARS paid the amount due that they owed from last year, and they made 2 provisional payments, but they never gave the amount. Then it says that the income tax is 30% of the net profit. That figure is my net profit over there. So I'll calculate 30% of that. I'll fill in the income tax. So I'm adding. I'll make that the total. So I take the 456 minus the 8,500. I get 447,500. So those two bank figures make up 447,500. And it says it's 2 equal payments. So I divide by 2 to get the amount that each one has to pay. Okay. But then the next account that they want us to do is the ordinary share dividends account. What's very important here, I need to know the number of shares issued. Or I need to know the number of shares in issue or the number of shares issued so that I can determine the dividend, because the exercise or the question will always tell you so many shares were issued and a dividend was declared at so many cents per share. So this dividend account, you're going to have 2 dividends. One will be during the year and one will be at the end of the year. Or one is normally paid and the other one is normally declared. Okay? But it all depends on the number of shares that was issued. Must also just remember that ordinary share dividend account is a nominal account and it will close off to one of the final accounts, which will go to F number 3 in this case, which will be appropriation. Okay? As we do this, I will explain where that is coming from. Okay, so the information talks about dividends. But it says on the 31st of August, an interim dividend of 25 cents per share were paid to the shareholders. Okay, so in other words, we're paying 25 cents per share. So 25 cents per share is 25 over 100 times the number of shares at the particular time. Now it says on the 31st of August. Then it says that the new shares do not qualify for dividends. Okay, so the new shares do not qualify for dividends. That means on the 31st of August, you only had 600,000 shares. Okay. On the 31st of August, you only had 600,000 shares. So if I take 25% of 600,000, I will get 150,000. Now this is happening on August 31st, and we are paying this, so it will be bank 150,000. Okay, so it's again just bank because we're paying. It's an interim dividend to get the amount. It's 600,000. They tell you that the new shareholders, the extra 400,000 that you've issued, they don't qualify for dividends, so you only take the 600,000. And then it says a final dividend, that's for the interim, a final dividend of 42 cents. So it's 42 over 100. Per share was declared on the 28th of February 2017. Only shareholders on record will receive final dividends. Okay, so what are they saying? They're saying, I need to go and calculate the number of shares. So let's start right at the beginning. Remember that they had 600,000 shares. Then they issued an extra 400,000 to get the million. Then they're going to repurchase 120,000. Yes, it says that they're repurchasing 120,000. So now they have 880,000 shares. Right, so now it says only the shareholders on the record, which means 880,000 times 42 cents. Only they will get dividends. But we're not paying them, we're only declaring, which means we still owe the shareholders for dividends. Which means we still owe the shareholders for dividends an amount of, if we calculate that quickly, it says 42 cents times 880,000. It gives you 369,600. Okay. Please take note, grade 12, that the first dividend is an interim. So we'll have to write bank because we're paying. The second dividend is the final dividend. We're only declaring, we're not paying, so we still owe the shareholders for dividends the 369,600. Right, then because this is a nominal account, at the end of the financial year, it will close off to appropriation. And that figure will be 519,600. Okay, we'll come back to answering a few questions there quickly. Let's just have a look at this. It will close off to appropriation. So when we do the appropriation account, we're going to need that figure. We're also going to need the income tax figure, and we're also going to need the retained income figure. Okay. So let's just go back to the question quickly. It was, how do we calculate the capital balance? I take my 4.1 million and I minus the 492,000 and I get that answer. Okay, which should come to 36. Oh, there we go. Okay, that should be 3608,000. There we go. And not 3848,000. Come to 3,608,000. Okay, just a calculating error on my side, I think. Okay. Thank you for that. Okay, then, so we're looking at the retained income, which will go in conjunction with the appropriation account. So we'll come back to this one. We just have to do the appropriation account, and then we should be okay. Okay, so your appropriation account starts with your profit and loss figure of 1,475,000. Okay, then on the debit side, we have income tax. We know now that the income tax is 442,500. Then below that, we're going to have ordinary share dividends. And that figure we got just from the ordinary share dividends account, 519,600. Okay, so we're going to make this the total, 475,000. Okay, and then we calculate the missing figure, that one over there, and that we're going to take to retained income. So the missing figure will be 512,900. Sorry, 512,900. Okay, so this part here, we need to take back to the retained income account and then only complete the retained income. So let's just recap on this quickly. It will be the profit and loss figure. Then it's the income tax and the ordinary share dividends. So I take the profit and loss, the net profit, minus the tax and minus the dividends, and we get the retained income. So when we're coming back to the retained income, right, there we go. The 500 figure for the appropriation will then just be Feb 28. $512,900. Right, then the only thing we have to do is we have to balance the retained income account. This is February the 28th. We have to balance. Okay, so we have to total this. So that gives you 1,250,000. The balance is 998,000. Okay, so we've got the income tax, we've got the appropriation, we've got the retained income, we've got your SARS, we've got the ordinary share dividends. So all this information we have to plot straight onto the retained income note and the ordinary share dividend note. So this information is exactly the same as the ledger that we did. Okay. So it's going to be a note ordinary share capital and a note retained income, which should be exactly the same as the ordinary share capital note, or to go with the ordinary share capital account and the retained income account, it will go with the capital. So if you can remember, authorized 1 million ordinary shares. No calculation, no amount, you just write 1 million ordinary shares. Okay, then when it gets to issued, we're going to have 600,000 ordinary shares at the beginning of the year, which was the 1st of March 2016. And that figure was 2,100,000. Then we've issued the extra 400,000. It was at 5 Rand. So 400,000 times 5 Rand gives you the 2 million. We'll be back at the 4.1 million. And we're back at the 1 million shares. Okay. Then it says that we want to repurchase 120,000. And the average was 4 Rand 10 cents. So 120,000 times the 4 Rand 10 cents, that gave me 492,000. I have to put that in brackets, in a minus. Let's not make the same mistake again. It was 3,608,000. And the number of shares over here gets to 880,000. Okay, as you can see, that is the balance of the capital at the end of the year. That's the number of shares. So this is just ordinary shares on the 28th. Okay, that's obviously 2017. Okay, so that is the same as the ordinary share capital, except this one slightly different. Let's just have fill this in quickly. It says net profit after tax. Will be repurchase above the average. And it's going to be ordinary share dividends paid and declared. Okay, the answer at the bottom or the answer at the end of the note should be the same as the balance in your retained income account. Okay, but what we know is it was 2 Rand 10 cents above, so that figure will have to go in brackets. Okay, so we can get that, and the ordinary share dividends will go in brackets. The first dividend, right, was 150,000. The second dividend was 369,600. And that total dividend came to 519,600. The repurchase, it was obviously times 120,000. That comes to 252,000. Right, so the net profit after tax, 1,475,000 minus your income tax, 442,500. Then the income tax figure was 1,032,500. Okay, I'm going a bit fast, grade 12, but all these figures you'll find in your ledger. That's the before tax, that's minus the income tax, That's in your retained income account on the debit side. That's in your ordinary share dividends account, the bank figure on the debit side, and the shareholders for dividends figure on the debit side. So if I add this two and I minus those two, I should get the same answer as in the retained income note, which gave me 998,000. Okay, so if you have a look at the capital note and the retained income note, it should be more or less the same as your ordinary share capital account, and all these figures will be reflected in your retained income note. Just watch please that the net profit after tax you'll have to go and calculate, because that figure appears in the appropriation. That's on the credit side for profit and loss, and that will be on the debit side for the income tax amount. Okay. Then also let's just see if we can answer just a few questions quickly. Okay, in the ledger, the question is a question where it says that the opening balance of the retained income can also be transferred to the appropriation account. We must just remember that the subject guidelines gives you 3 different ways of treating retained income and recalculating the retained income at the end of the year. So if we go to the subject assessment guidelines, you'll see there's 3 different methods of calculating the retained income. Some schools prefer to take the amount straight to the appropriation and then calculate the new retained income in the retained income account using the same principle, or some schools just do it the way we're doing it over here. Whatever you do at school, you do in the exams. They will make provision for all 3 different methods of calculating or of doing the retained income note. Okay, I hope that answers that question. I would like to thank you for taking note and following. This is a very important section of the work, and I cannot emphasize the importance more. Please make sure you understand the notes and the capital account and the retained income. Make sure you know how to calculate the dividends. And from my side, I wish you everything of the best for the rest of the year. Thank you.